Get started now.
Yeah.
I want to welcome everybody today to ITIF for a release of a new report that we've issued today on understanding international leadership in mobile commerce and mobile payments. Before I talk about that, I'll make some opening remarks about why this is important. I'll turn it over to my colleague Stephen Ezell to talk a little bit about how we did the study, what we found, and what are some of the policy recommendations, and then we'll turn it over to two respondents to talk about that. So let me just introduce everybody real quick. Stephen Ezell is going to describe the report. He's a senior analyst at ITIF and the principal author of the report. After Stephen, we'll hear some remarks and comments from David Jepson. David is Vice President of NTT Docomo USA. For those of you who don't know, Docomo is the principal, one of the, I guess, the largest in terms of market share mobile provider in Japan. David manages Docomo's relationship with the U.S. government and the telecommunication industry representatives here in Washington. And before he came to Docomo, he was at Lucent Technologies, where he was the Regional Director of Public Affairs for Asia Pacific and China, and also was Director of Lucent's offices in D.C. Prior to joining Lucent, he was a telecom attorney at the firm of Dickstein, Shapiro, Morin, and Oshinsky here in D.C. Next to David is Mark McCarthy. Mark is an adjunct professor at Georgetown University's Communications, Culture, and Technology program, where he teaches courses on the economics of network industries and public policy towards them. He is also an appointed expert to the American National Standards Institute of International Organization for Standardization, ISO, the Technical Management Board on Privacy. From 2000 to 2008, Mark was the Senior Vice President of Global Public Policy at Visa, where he was responsible for policy initiatives on a wide array of issues regarding electronic commerce and other issues like that. And prior to joining Visa, he spent 6 years at Walker Wechsler Group, a public policy consulting firm. And before that, he was on the House Energy and Commerce Staff Committee. Mark also has a PhD in philosophy, and I've known Mark for probably 10 years, and I never knew that. So we'll see how you philosophize. So we'll start off just with a...
Shut off our cell phone.
We should say that. Okay. Everyone, please, shut off your cell phones.
This is what happens if you don't shut off your cell phone.
Exactly. No, what happens is we have that ejector seat, you know, in the movies. All right, so we're going to show just a little video on this. And it's sort of, in a way, kind of a sad commentary that we have to show video, because I would assume that most people don't really know that much about what a mobile wallet is, how it works, if I asked you how many people know about broadband, everybody would say yes. So first of all, I just want to show that. This, by the way, is the Sony chip in Japan that they've deployed.
Make your purchase. Buy tickets for your favorite event. Collect loyalty points. Lock or unlock your door. Around town, at the store, at home, at work. In the blink of an eye, the world has become more convenient. Sony has already shipped 100 million Felica IC chips. Felica technology, making life simpler in smart ways. Felica is used for a variety of public transportation applications across Japan. The Suica card, introduced 5 years ago by East Japan Railway, is becoming increasingly popular, and already more than 15 million cards are in use. From 2004, the Suica e-money service was introduced, allowing the Suica card to pay for purchases in shops and convenience stores located in and near JR stations. The number of these shops has already reached 4,000. In January 2006, the mobile Suica service made its long-awaited debut. Users of mobile phones with Suica card functions can ride trains simply by passing their phone over the sensor plate of the automatic ticket gate. They can check the remaining balance, scan all purchases made, and even recharge the embedded Suica card anytime, anywhere, using the mobile phone's communication function. Japanese mobile phone carriers are planning to release more new models incorporating this service.
Okay. By the way, we weren't trying to do a commercial for Sony. It was just when you actually go on YouTube to find good videos, there's a paucity of good videos on this, and that was the best we could get. So, and actually that one's a little dated. So, I guess I want to start off by questions later. Why do we care about this? Why do we care about being able to do this thing? First of all, the ability of taking this device or any kind of mobile device, whether it's a phone, excuse me, or a card, and to be able to use it essentially as a mobile computer. That's really what we're talking about. Right in the last decade or so, the productivity gains and the improvements in quality of life in the U.S. that are related to the ability to do computing has been enormous. But what we have not been able to do in the U.S. is transfer that into a mobile environment, transfer that into something where you're walking around and you're able to engage digitally. And so that's why this technology is so important. The second piece of this is not just about contactless payment cards. If all this was about a way to, instead of running your credit card through a magstripe reader and instead waving it over a contactless reader, you know, sort of big deal. What's the big deal there? It certainly has some benefits. It speeds up throughput. It does some other things. But it's not really a big revolutionary thing. The revolutionary part of this, I would argue, is the ability to have a multifunction device. So if you noticed in that video, the person was actually using the phone to check in into a subway or buses or other things like that. And it can do that because it can record not just how much money you owe, but it could record what stop you get on, what place you get on, and then when you get off, calculate the amount you pay and automatically pay. So even, by the way, I should add, by the way, the other interesting things about getting rid of cash in the economy, moving to this, would be just think about how much money we pay in the U.S. for parking meter vendors. There are tens of thousands of parking meter vendors every day that walk down the street, put a little machine under there, the coins dump into this thing, and they take those somewhere, I don't know where they take them, and then they take them somewhere else and send them to a bank, and the bank has to process all that. All of that takes time and money, and you could automate it through this kind of device. But the real power to this, though, is the ability to combine information with the actual financial transaction function. So, for example, in Korea, you can take this device, press a few buttons, find the local movie that you want, find a movie that you want to watch, find the nearest movie theater, download the ticket, walk into the movie theater, and wave your cell phone over a turnstile and walk right into the movie. You don't have to get a paper ticket. You don't have to show the paper ticket to a vendor. You just walk in and it's all automated. You can do that in parking garages. Go into a parking garage in Japan, wave this, or in Korea, get the ticket on it. When you leave the parking garage later that day or a few days later, if you're at an airport, just wave your cell phone like that. In Japan now, people are using this device to board airplanes. Again, you go on here, you download your boarding pass, you walk into the gate, you just wave your cell phone. Don't need a ticket, don't need all of that paper. In New Zealand, I think one of the things they're rolling out or experimenting is the ability to take this device. I want to go to Chicago, I'm going to stay at the Marriott. I'm going to just download this Marriott thing, and it'll download the actual key code. So when I go to the hotel, I don't have to check in, I don't have to do anything. I walk up to room 742 and I wave my cell phone at the door, and it opens the door automatically. Classrooms, in Korea and Japan, students use this to wave, as they walk into the classroom, they wave it in front of there so the teacher doesn't have to bother to take time to take roll. So the roll is automatically done. So it's paying for cabs. I don't know how many of you, when you go in a cab, I assume most of you hopefully get it reimbursed by your employer. Well, when you think about what a hassle that is, can you give me a receipt? Cab driver hunts around, finds the receipt. Sometimes they don't. You have to write down what it is. You take it back. You give it to your secretary, who gives it to accounting. They then enter it in. With this device, you just wave it in the back of the cab, and you can have the receipt set up so it's automatically emailed to your accounting department. You've sort of automated that entire process. So you can get a sense of sort of what kinds of things one can do with that. I think the key thing about this technology, though, we would argue, this is essentially a platform technology. This is a technology that once it's there, an enormous creativity of applications will emerge, as we've seen on things like the iPhone. So for example, last weekend I was up at the Giant with my daughter. We're shopping, and there's a woman ringing a bell, and my daughter's going, "What are they ringing a bell for?" And I had to explain to her about Goodwill and the Salvation Army, and we put some money in the bucket. Well, in Korea, you have the Salvation Army guy or gal ringing the thing, but you just wave your cell phone in front of their little thing and you donate your money automatically. So the Salvation Army figured out a creative way to use this. They get a lot more money, and they're able to make it convenient for people to do these things. So why do we care? Why is there talking about policy? Why isn't the market just going to do this? We will argue essentially that the market cannot do this on its own, at least in the short run, or even the moderate run probably, because this is essentially a technology that is a chicken or egg technology. So if you think about somebody who wants to write an application for the iPhone, and there are thousands and thousands of application writers. There's the one I like the best is the drinking the beer on the iPhone, where you sort of bring your thing up and it makes this noise, and you see the beer drop down in the phone, and that's a great application. But there are actually really good applications on the iPhone which have value other than entertainment. But you don't need to, you just basically, to write an iPhone app, you go and get the API from Apple and you write the app and it's done. Well, what if you want to write a mobile commerce app? One of the things you need to do to have a mobile commerce app, you can write a mobile commerce app, but what you need is a phone that accepts it, and there aren't any in the US. And the second thing you need is, even if you could do that, even if you had a phone that accepted this app, you need to have a place to use it. So you need to have parking garages. You need Metro to be able to use it. You need to have taxis use it. You need to have 7-Eleven use it. So until merchants, transit operators, and others equip their systems with near-field communication readers, there is no reason one would get a device, a phone, with this kind of technology application on it. Well, why would T-Mobile or Sprint or Verizon or anybody else sell you a phone with this application on it if there's no need, if you can't use it? I would love to have a phone like this, but I wouldn't buy one because I couldn't do anything with it. So what you have is what economists would call this sort of network externality, this chicken or egg paradox. And what other countries have realized, and unfortunately we haven't with our sort of overriding market-based ideology in the US, that the market solves these problems. What other countries have realized is markets don't solve these problems very efficiently. So as Stephen will talk about now, if you look at the countries that are really the leaders, Japan, Korea, and increasingly it's going to be Singapore, and maybe even the UK, these are all countries that have national strategies to get all the players together to help that. Now I'll just leave by saying at the end of the day, the private sector has to take the lead on this. The private sector has to make the big investments on this, take the big risks. There's no question about that. This is not something where the government should be building the system or running the system, but the government can play a really important role in helping to create that system and getting all the parties aligned in the right way. So with that, Stephen's going to talk about how Japan and Korea have actually done that.
Rob's too tall. All right, thanks, Rob. That was great. Okay, in today's presentation, we are going to look at which countries are leading the world in contactless mobile payments. Now, this study looked principally at the countries that were making progress in not just deploying contactless payments on smart cards, but also getting to the stage of deploying contactless payments on mobile phones as well, because that adds an additional layer of ecosystem complexity. We also did not look much more than a box on another form of mobile payments that's commonly talked about in the press, and this is mobile payments as are used in Kenya and Philippines for funds transfer on devices. So we're looking at contactless mobile payments from an application platform perspective, as Rob described, so look for that in the report. We'll look at what factors have led to countries' success in contactless mobile payments. We'll look at what the United States can learn from global leaders, and we'll close with a set of policy recommendations for the United States. Okay, very brief table, just trying to lay out some of the proof points on how Japan and South Korea are in the lead, and certainly over the United States in contactless mobile payments. In Japan, 78 million mobile phones are equipped with electronic wallet technology. This means they're embedded with a mobile Felica integrated circuit chip. You find 12 million phones in South Korea have this capability, and in the United States, only a handful of phones in trials that have been done over the past 3 to 5 years. As far as the number of citizens actually using mobile wallets in these countries, 17 million citizens in Japan use their mobile phones in the way that Rob described. 68 million use smart cards for contactless payments in Japan. In South Korea, 3.6 million people actively use their mobile phones for contactless mobile payments, and about another 18 million do so with contactless cards. As far as the number of merchants deploying contactless enabled point of sale, or POS readers, and then the total number of POS readers deployed, Japan has 608,000 merchants whose stores can accept contactless payments. The number of actual readers is far greater, although I couldn't find a specific number for that. In South Korea, there are 500,000 point of sale readers deployed in stores. And in the United States, we have 140,000 merchants who have deployed a total of 500,000 point of sale readers to accept contactless payments. Now, briefly to describe that, the major card issuers have introduced contactless credit cards now, and Mark will share more about that, so that one can take your Blink card or your Payway from Visa and go in and make contactless payments at 140,000 US merchants. But this capability is only on a credit card, and as we said, not yet on a mobile phone in the United States. Okay. A very brief case study on contactless mobile payments in Japan. And, the Japan story is certainly that Docomo led a vertically integrated ecosystem to introduce what's called the Osaku Kaitai, or the mobile wallet in Japan. Docomo's role included forging a 2004 relationship with Sony, who had developed the Felica chip, to get that chip embedded on the mobile phone. Sony exerted leverage on handset manufacturers to produce the Felica-enabled phones. Docomo subsidized the deployment of the point-of-sale reader terminals at merchants. So Docomo actually set aside 2 billion yen to subsidize merchants deploying these POS readers. It took an equity position in a credit card company, Sumitomo Mitsui, spending $1 billion to acquire a third of the company. And what that enabled Docomo to do was introduce a credit service on the mobile phone. It put its marketing muscle behind pushing contactless mobile payments in the marketplace. And critically, in working with Sony to develop the technology to embed the mobile application on the mobile phone, it did not seek an exclusive right to use that in the marketplace. So it made that technology available to be licensed by competing carriers in Japan. So there's no question, everyone would agree that Docomo took the central role in leading a vertically integrated ecosystem in Japan. The question is, why did they do all this in the face of inherent risk in the marketplace of an uncertain technology platform? Well, I'll leave the answer to that question until a bit later. Let's first turn briefly and explain the South Korean mobile payment story. Mobile payments in South Korea actually began at the bottom of the page with SK Telecom's Moneta. It was a mobile wallet application launched in 2002. SK Telecom, as Docomo in Japan did, took the lead in kind of leading a vertically integrated mobile network operator-led ecosystem. Moneta has met with middling success in the marketplace for a variety of reasons. There were fears of technology lock-in, which meant that merchants weren't convinced that they would only be able to deploy one reader. It looked like they would have to deploy different point-of-sale readers for competing services in the marketplace, and they didn't want to do that. There was also distrust from the bank partners. The way Moneta was going to monetize contactless payments was that they tried to reach an arrangement with the merchants themselves and the credit card issuers that they would split up the merchant account processing fee concurrent with each transaction in a way that each party would take a share. They can never really work it out. The banks thought that SK Telecom was demanding too much of the merchant account fee on each transaction, and ultimately, kind of Moneta hasn't met with much success in the marketplace. The head of one of the bank's rival, Cookman Bank, said that the likes of SK Telecom are actually out there to steal our business in the marketplace. Well, so mobile payments didn't meet with much success with Moneta, but in 2004, along came T-Money. And T-Money was launched in 2004 by the Korea Smart Card Company. This was a joint venture public-private partnership between the government, LJ Telecom, and credit card issuers, and it introduced an interoperable platform called T-Money that worked as both a transportation card and as an electronic money card. So like the video showed with Felica, you can use your T-Money card for transit, and you can use it in any number of shops and convenience stores, etc. So it was designed from the beginning to be an extensible and interoperable platform that had nationwide coverage, and its success has been incredible. They do 30 million contactless transactions a day in mass transit alone, and millions more with the electronic money feature. So I think with T-Money, you have a success story in South Korea. So what factors then contribute with success to contactless mobile payments? And we would classify the success factors into two types: non-policy factors and policy factors. Briefly on the non-policy factors, I think you have to say that the presence of a high-density urban population in Japan and South Korea were critical. With 40% of both countries' populations, living within Seoul in South Korea and Tokyo in Japan, here you had a high-density market, a critical mass of early users across which the cost of research and development into these technology platforms could be amortized, and a reasonable expectation that you could quickly bring a marketplace to scale. And certainly Suica in 2001, T-Money in 2004 show that contactless payments in these countries got their start through the mass transit system. I think it's also reasonable to point to the existence of intense mobile cultures, mobile lifestyles in these countries. In Japan, there is a professed katai culture, means mobile culture in Japan. Citizens admit to being obsessed with their cell phones and taking them everywhere, having it with them at dinner on dates. It's a very intense mobile culture. I think contactless payments there are actually tied into how Japanese maybe live their lives. They don't cook at home as often, they take out food much more often, so these low-value micropayment transactions are actually very tied into how Japanese live their lives. So I think that's a contributing factor. That said, we've been told time and again that any number of technologies, mobile technologies that arose in Asian countries, like SMS, text messaging, like cameras on phones, were peculiar to the eccentricities of a Japanese or South Korean mobile culture, and they would never find adoption in the United States. And I think that's just patently wrong. I think we're behind in mobile payments, but we can learn from these countries' successes and find that consumers will readily adopt it here. We spoke about the vertically integrated ecosystem. When you read the literature, and there's a Harvard Business School case study on how Japan introduced mobile payments, and I spoke with numerous academics on this question, and you ask them, why did Docomo in particular go through the trouble of introducing this ecosystem? And you hear competition was the answer. So in 2004, in Japan, the government was going to sell a license to new mobile entrants. They were going to force number portability, and you have these competitive factors in 2004 that led Docomo to want to introduce a mobile wallet to differentiate itself further in the marketplace. Now, certainly those are, I think, reasonable points to make, but the fact is, if competition were the key factor in explaining why Docomo led that ecosystem in Japan, well, we'd have it here today. We have as much competition in our mobile marketplace as they do in Japan. In fact, we probably even have more. I think you could actually make a stronger case that because Docomo owned 56% of the share in the mobile marketplace in Japan in 2004, that it was actually their strength and their dominant position in the marketplace that gave them the resources and the deep pockets to be able to make the investments in this kind of technology. Moreover, because they had such a dominant share of customers, they knew they had a ready marketplace of customers who would buy the service. They could scale it at a higher basis. So we don't think competition is a key determining factor. What we do think makes a real difference in countries' success at mobile payments is the policy factor side of the equation. I think here also you see a business climate that's geared to making longer-term investments in countries, especially in Japan. And you also see countries that are more receptive to public-private partnerships. We think ecosystem facilitation, the role of government in spurring demand and being an early adopter of contactless technologies, and the role of government in setting conditions were all key factors. So I'll elaborate on those 3 points over the next 2 slides, giving particular examples of how this played out in South Korea and Japan. Okay, Japan. So when you go in and you read the strategy documents from organizations like MIDI in Japan that are really trying to position this country to be competitive in information communications technology on a global stage, you find documents like eJapan Strategy 2, issued in 2004, which says explicitly, and I quote, "The role of government strategy is to furnish overall direction for the marketplace and motivate the activity of the private sector in areas in which the government deems the Japanese ICT industry should be globally competitive." We contend that this is exactly what happened with contactless mobile payments in Japan. We contend that Japan's government played a subtle, if behind-the-scenes role to ensure collaborative alignment of actors in the Japanese mobile payments ecosystem. And this means it exerted subtle pressure on key players like Docomo, JR East, Sony, the banks, to evolve the mobile payments system in a collaborative, mostly interoperable environment. When you read the literature, you find quotes from the then president of Docomo, who, in explaining his decision why Docomo didn't keep the Delica technology for itself, but why it licensed it to competitors, he said, well, we must act in a way that Docomo would never abuse its market position. Well, that's a pretty strong statement. One way in which the government was able to exert subtle influence over these actors is by the fact that it either owns or had owned them. So even to this day, the Japanese government retains a 33.3% stake in NTT, and NTT owns a 60% stake in NTT Docomo. So in vicarious ways, the government is able to exert subtle influence. Of course, it had once owned JR East and was positioned to kind of influence JR East to deploy the contactless readers so that they would work with the mobile phones.
You want to explain JR East?
Oh, JR East. JR East Railways is the largest rail operator in Japan, metro and rail lines around Tokyo. It's a country's railway. I think you see other evidence. MITI, the Ministry of Economy, Trade, and Industry in Japan, oversees the country's banking industry. Well, in 2006, they made some subtle changes to laws pertaining to banks and credit in Japan. So it changed the law to make it possible for non-banks to make wire transfers. It also changed the credit regulations. So up until 2006, banks were prohibited from offering revolving credit lines to customers, so that in Japan, credit cards were essentially paid off at the end of the month and acted like a debit card. Well, in 2006, the credit regulations were changed, and lo and behold, now you have the ability for Docomo to go forward and offer its DCMX credit card service on the mobile phone. So subtle ways in which the government opened up and made the competitive environment possible. There are direct ways as well. MIDI actually took a role in openly working to promote Delica as a global standard for mobile wallets. In South Korea, as we said, the government directly spearheaded the creation of the joint venture public-private partnership Korea Smart Card Company. They organized and hosted formal meetings with carriers and banks to support standard setting for mobile wallets. and they were a direct early adopter deploying mobile payment systems in taxis and making it possible to make contactless payments to pay your taxes, to pay for civic services in Japan and in South Korea, like marriage licenses, etc. One official noted, and I quote, "Positive government commitment to support mobile payments is required because many technical issues are closely related to government policy and strategy." So that's a direct quote from one of the South Korean officials working on the effort. In Singapore, the Information Development Authority in 2008 formed a roundtable group of banks, mobile network operators, and transit companies with the specific intent of developing a national NFC, or near field communication strategy for Singapore. The country has elected to create a national trusted third party that will manage mobile wallet applications in a way to ensure interoperability between the NFC services of mobile operators and service providers. And one reason it's doing this is so that the mobile payment system that evolves in Singapore will be fully compliant with the full range of existing contactless standards and infrastructure that already exist in the marketplace, such as Visa's PayWave, MasterCard's PayPass, and the country's current CAPS's transit system. Why did Singapore's government do this? Well, because they found that the market benefits of a fully interoperable NFC environment would be 8 times greater than a non-interoperable environment. So what they're driving at here is full interoperability so that I can use my mobile wallet, whether it's on my smart card or on my mobile phone, that I can use it with any contactless reader in Japan, in Singapore, I'm sorry, whether it is in a transit environment or a government agency or a commercial setting. The United Kingdom as well has also looked at a role government can play in facilitating a country's mobile payments ecosystem. Just in 2009, in October, they released a smart and integrated ticketing study which assessed the benefits of deploying universal contactless payments in transit in the United Kingdom, finding that the benefits of going contactless via NFC would save the country £2 billion annually. So what can the United States learn from the global leaders? First, we would say it is absolutely essential that transit operators, card issuers, and mobile operators work together, work out upfront electronic wallet capabilities and standards for smart cards and mobile phones. We have to have a fully open, interoperable mobile payment system, and this means an interoperable standard for both the NFC for the technology, but also for the mobile wallet application, so that I know I can take my mobile wallet and use it anywhere in the country. The opportunity is missed if the electronic wallet only has the payment functionality and misses out on the information and storage, the ability to store and present ID credentials and communication features. So it has to be a multi-function mobile wallet, not just a device that can make payments like a credit card can do. The participation of mass transit is absolutely critical, and government engagement can play a key role in catalyzing demand, setting conditions, and facilitating ecosystem development. In these countries, I think one of the most critical things you see is that the government recognized that to spur demand in the marketplace, to catalyze demand, if the transit agencies were a place where consumers knew they could take their mobile phone and use it anywhere in the country for contactless payments, that was a real driver for marketplace adoption, and it also signaled other commercial actors in the ecosystem that if customers can use it there, then I should feel comfortable deploying readers because I know there will be a market for it. Finally, I'll close with a set of policy recommendations for contactless mobile payments in the United States. Our first recommendation would be that the government create an intergovernment mobile payments working group along with a private sector advisory council to develop a United States mobile wallet strategy by mid-2010. we would envision actors from the government involved being FCC, Federal Communications Commission, Federal Trade Commission, Department of Transportation, NIST, Treasury, and the General Services Administration. But part of their mission would be to develop a game plan for how the government can deploy contactless infrastructure in its own agencies. So the General Services Administration should deploy contactless readers at all cash facilities, at all parking garages that it operates. Another element would be requiring mass transit agencies that receive federal funding deploy interoperable contactless payment readers as part of the next Surface Transportation Reauthorization Act. And we think that the government should require that ID programs like DOT's Common Access Card or the Transportation Workers Identification Credentials Card be able to store electronic wallets on them. As far as setting conditions, we would advocate that the government harmonize and extend consumer protections to cover mobile payments. So what this means is that the same safeguards I have now as a user of credit, that I can contest charges, etc., be extended just the same to payments that are made on mobile phones. Policy makers should recognize the security of contactless payment systems. They're actually likely to be much safer than transactions made by physically handing somebody your credit card. You have the ability to put a passcode on your mobile phone. If your phone is lost or stolen, the operator can actually manually shut it down. So there are a range of features that actually make contactless mobile payments much safer than the way we do things today, of just handing your card to somebody. And I've asked Mark McCarthy to give you a bit deeper understanding of how the security features of contactless payments work. And finally, we would say that as part of this process, the government should encourage competition and not favor entrenched interest. As Rob gave the example, contactless payments open up a range of opportunities to replace processes that once had to be dealt with manually with the ability to do them electronically. So now that I can get my movie tickets to my phone, I just need to swipe them at the entrance of the movie theater. Well, now you don't need somebody to handle that ticket stub and process your ticket as you enter the movie theater, or as you exit the parking garage, or as you check in at an airline. So this is a disruptive technology platform that may encounter resistance from entrenched interest in the marketplace, and the government should just resist the urge to cater to those interests. All right, thank you for your time. I'll turn it over to David Jepson of NTT Docomo.
For folks in the back, there are seats right up here, so if you want to come on up and join us, feel free.
Thanks, Stephen. Thanks, Rob. Appreciate the invitation, the opportunity to be here. Let me give you a few additional comments to maybe expand on how Stephen set this up, and then I'll also try to maybe give you some reaction to your paper. Let's see, is the red button?
No, it should be the one on the right.
So let me set the backdrop of what some of the motivating factors I think were that caused Docomo to take a very proactive and aggressive effort to head in this direction. First thing you need to understand is that the market in Japan is very mature, very sophisticated. As Stephen's slide pointed out, the penetration rate is quite high, and the room for further growth was getting quite limited. And moreover, like here, Japan is facing some very disruptive trends with a quick move towards open platform handsets and a more open model where the wireless carrier will play a much different role in how it's been doing business to date. So against that challenge, Docomo has been working very hard to create new business models that are not dependent on traffic revenues solely, but that they do offer synergies and leverage other core functions of mobile communications. For example, the real-time immediacy of mobile communications, the personal authentication and the location capabilities of mobile. So the evolution of the market as we see it at this stage is to move beyond a pure communications infrastructure or an IT infrastructure into an infrastructure that will assist your lifestyle or your behaviors and help your lives in life in everyday business and everyday interactions. So with that, one of the issue we're talking about here, more specific, is the Wallet Phone Initiative, which, as Stephen pointed out, is called Osaifu Keitai in Japan. As is set up as pointed out, the functionality will allow you to do very many different applications: credit cards, commuter passes, tickets, your loyalty cards, even your keys or your entrance passes for your work or home. Now, the only way that Docomo's really been able to capture the usage of this, since it does not use the mobile network to do this service, is through industry surveys. And they've done, since they launched the service in 2004, they've tried to do annual surveys to capture what the usage patterns are. Now, of Docomo's subscribers, there's now 36 million on its network of these handsets that are capable of using the Felica service. And the current count of Docomo's readers, and Stephen gave a snapshot of Japan generally, is now 420,000 point of service readers throughout Japan. Docomo's also now, in 2008, deployed readers outside of Japan, in Guam and in China, locations where primarily Japanese consumers are quite prevalent. And according to these latest surveys, 26% of the subscribers who have these phones have used the service. Of those, more than 70% use it quite frequently. More specifically, 30% use it on a daily basis, 40% use it 1 or 3 times a week. From year-to-year surveys, the growth of consumers who use this daily has increased by 10%. The category of users, which is the heaviest users, are males in the 20 to 30 age bracket. However, females in the 20 to 30 age bracket are the fastest growing category of users on a year-to-year basis. As far as locations, in the middle there, I apologize, it's the Japanese slide, but that says Osaifu Keitai right in the middle in Japanese. The biggest, the location with the most frequent use is convenience stores, followed by vending machines, train tickets, restaurants, kiosks, drugstores, supermarkets, shopping malls, airline tickets, online retail sites. And in fact, some laptops now, you can do the scan right over your laptop and make the purchase with your Felica phone. Airports and taxis. So this slide will show you some of the different companies in Japan that are part of this ecosystem. Now, I want to focus just a little bit more on the credit card application. As Stephen mentioned, Docomo began this effort in 2005 when it entered into a partnership with Sumitomo Mitsui Card Company. That's one of the largest credit card issuers in Japan. The credit card service was launched in 2006, and there's 2 key elements of this service. First, Docomo launched a mobile credit platform and branding service, which they call ID. And it's an open platform available to any card issuer who wishes to join. And as of March of this year, there are now 68 different credit card companies that offer this service on the ID platform. Second, Docomo launched its own credit card service called DCMX, and there's two versions of DCMX. There's a DCMX Mini, which is a small transaction offering, and any subscriber can easily sign up on their mobile phone and get an instant line of credit at 10,000 yen per month. Any subscriber over 12 years old, that is. The second is the DCMX larger credit line up to 200,000 yen per month. And on this, you also are issued a plastic credit card co-branded with Visa and MasterCard that you can use outside of Japan. With the DCMX service, there are loyalty points involved, which create further retention and usage. So that's the basic snapshot of that. Now, the revenue, the business model looks something like this. As you can see, Docomo receives a commission both as the platform provider on the ID platform, as well as being the card issuer itself. And so this is part of the effort to create new streams of revenue outside of communications traffic. The other benefit, of course, from pursuing services like this is customer loyalty and retention. So since Docomo has launched this service, it's seen significant improvements in its retention rates. And then finally, just to go back to the first point I made at the outset, is that this Osaifu Keitai is really just one of many efforts to evolve the mobile phone into every aspect of your daily life. Very many different paths are being pursued to evolve the mobile communications network into a much broader aspect of our daily lives. So I'll end it there.
Okay. Thank you, Dave. Mark?
Okay.
Move it over a little here so I can see my slides. Thanks very much. This is a great paper. It's sort of very high quality, thoughtful, does the exact kind of things that you want ITIF to be doing, raising some good public policy issues and making some substantial recommendations. I want to talk a little bit about the U.S. market and then a little bit about the policy issues that have been raised. The U.S. market is developing in sort of two stages. One is Visa, MasterCard, American Express are introducing contactless payments, and then the next step is to embed that kind of functionality within phones. So first, what's going on with the contactless market? There are a number of issuers of contactless payment cards right now. Wells Fargo, Chase, JP Morgan Chase, Citi, both Visa and MasterCard and American Express offer the service. As Stephen mentioned, the merchants are beginning to install the terminals in order to accept the payment services. But at this point, there's limited deployment. Merchants like them to the extent that they provide a little bit of extra speed and convenience. So you find merchants like CVS or 7-Eleven or Burger King or movie theaters, where speed is of the essence and throughput is really important. They're the ones who are beginning to install the terminals that will accept these kind of cards. And the mobile, the mobile terminals, when they're introduced, would be compatible with the existing contactless terminals, so you wouldn't have to reinstall a new reader at the point of sale once the technology becomes embedded in a cell phone. But as of this point, it's not deployed in U.S. cell phones. That's a decision that's up to the carriers. And at this point, they have not seen the market develop to the point where they think that application makes a whole lot of sense. For reasons that Rob was talking about before, you have a kind of two-sided market here, and then until you get the deployment at the terminal level, it's not clear that you're going to have the investment at the level of the cell phones that will be corresponding. There are some beginning movements in the market. There are stickers that you can put on your your cell phone and use them in a contactless fashion. There's SIM cards that have that kind of functionality in it, but these are clearly transitional mechanisms, and they're not really fully deployed in the United States. What are the prospects? The key driver is going to be incentives for the merchants to upgrade. At this point, the infrastructure for payment cards is pretty well developed in the United States. It's been around, it's been proven successful for a fairly long period of time. And the question is, what extra value do merchants get for the extra investment in terminals that will function in the contactless fashion? So there's a benefit and cost question, and the marketplace is pretty good at trying to sort these kind of questions out. At this point, the marketplace has not endorsed the idea of widespread deployment. The payment card players, the financial institutions are looking at the possibility of subsidizing the installation of the terminals in order to move the market forward. This is not unusual. When the payment card industry moved from paper transactions to electronic transactions, there was a mechanism developed through reduced interchange charges that gave the merchants an incentive to move in that direction. And with that incentive, the market moved very, very quickly to a higher and more efficient level of technology. But there needed to be a mechanism installed to give merchants an incentive to move in that direction. And in that previous case, the private sector worked out a subsidy mechanism to make that happen. There's a question about whether carriers will move to thinking of themselves as payment intermediaries. As of this point, their role as payment intermediaries is very, very limited. They do it for digital content, especially ringtones. If any of you have a teenager at home, you probably know about this development. You download the ringtones, the payment appears on your cell phone at the end of the month. But beyond that, there's not very much of an incentive for the carriers to become involved in this. The driver for them to become involved would be interchange, to the extent that they're involved in this as issuers of payment vehicles. They would then receive a payment for every use of the card, so that would be a strong incentive for them to become involved. But there are some questions about their regulatory status. Would they become financial institutions if they did this? What would be their liability for transactions that didn't work out properly, and so on? So those are the market prospects in the United States. On policy issues, I want to talk about three things: security, privacy, and consumer protection. Here's a picture that gives you a sense of how these devices function. The key point is that it has to be brought very, very close to the reader, within a couple of inches. So the security issue that is sometimes raised, which is that you're wandering around the world and sort of random readers distributed throughout the universe are starting to read the payment information off of your card. It's unrealistic because you have to bring the card close to the reader. So that's one area where security is typically ensured. The more important security issue, and this relates to Stephen's point about increased levels of security. The current contact magnetic stripe system works on static authentication. There's a security code that has to be transmitted as part of the authentication process, and it's the same security code over and over and over again. So if that information is intercepted, or if that information is found in a database, it can be reused to make another transaction or to make a counterfeit card. In the contactless world, because you're dealing with processors that have the ability to change the security code every single time, you have dynamic authentication, so the card verification value is new every single time. And with that result, even if the transaction is intercepted, the information that is obtained can't be used for a new transaction and can't be used to make a duplicate card. And as a result, you have a higher level of security compared to the magnetic stripe world. Privacy issues. This is a serious issue, and the idea that the government should become more involved in pushing these kind of mobile applications reminds me that in at least one area where they did move in that direction, enormous privacy concerns were raised. When the State Department decided to move ahead with a passport that was RFID chip-enabled, many of the privacy advocates noticed that this could be intercepted. They didn't do the kind of security security that I described in the payment world, and there could be a possibility of that information being intercepted. So there can be some privacy issues here, but in the contactless world, typically privacy issues don't arise, and that's because when you use a contactless payment, the information that's transmitted is no different from the information that's already transmitted in the magnetic stripe circumstance. So there may be privacy issues in the financial system, and you know what should be done with credit card information and so on. Those are real issues, but there are no new issues created by the fact that you're using a contactless application or a mobile phone application. That could change if you start combining payment information with location information, and some of the applications do that. So, for example, you're walking by your neighborhood Starbucks, and suddenly you get a text message on your cell phone that says, if you stop into Starbucks, we'll give you $1 off if you use your payment application. Well, there you're combining location information and payment information, and that could raise privacy issues, and clearly has to be done with appropriate regulatory oversight and with the permission of the party involved. There is RFID privacy regulation out there. The European Commission has developed a set of recommendations for privacy in the area of the use of RFID, of which this near-field communications is one example. It's pretty generic, so it would include within its orbit these payment applications that we're talking about and the other applications that Rob was making reference to. And it may not be that one size fits all in that context. So, for example, one of the requirements in the European recommendation is that at the point of sale, you have the capacity to disable the RFID application. And the idea is that if you've got an RFID chip in your consumer product that you bought in the store, and you don't want it to follow you around the world, you want to give the consumer the option of saying, deactivate it before I leave the store. And it sort of makes sense in that kind of context. In the payment context, it would mean you want to have a facility at the point of sale that would disable the contactless payment function, which you don't want. So you've got to be careful not to have an overlay of regulation that is a little inappropriate for the application involved, and these generic RFID privacy rules might be too generic to handle the diversity of the applications. Consumer protection, this is a crucial issue. If you're using your normal payment application on a mobile card, on a mobile phone, all of the existing bank protections apply. So there are limits on liability, there are redress rights. If you've got a problem with the transaction and the merchant doesn't deliver the good, you can appeal to the payment card company for that. None of that applies in current form to other payment intermediaries who might be involved in the mobile payment world. Some of the carriers have begun to become involved in the CTIA, has moved in the direction of encouraging all of its carriers in the United States to sort of live up voluntarily to the payment card regulations that exist for the financial services world. And here's an example. Create a limit on liability for users that matches the limits on liability that are in current law. I think you're going to need that. You don't want to have consumers in a situation where they say, I don't know what to do if something goes wrong with my payment application, and they're not going to be in a position to know in detail whether the rules that apply to this payment application differ from the rules that apply to that application. You want to have a little bit of uniformity and harmonization in that area. So let me stop there. Those are my reflections on this, and let's have a discussion on where we go from here.
Great. Great, thank you, Mark. We've got a fair amount of time. We will adjourn no later than 11:30, so if you have comments or questions, you can identify yourself first. And yes, ma'am.
Hi, I'm Irene Wu from the Federal Communications Commission. Thank you very much for your presentation. Stephen, I had a question for you, and I think it's an issue that Mark brought up in his presentation as well. In Korea, Japan, and Singapore, at the time of the introduction of mobile payments, there wasn't that mature credit card system deployed. And so in many respects, there's a different kind of substitution issue that you have here in the United States that is different from what was occurring in those countries at that time. Do you address that in your paper, or do you have some insight into that?
Yes.
that is addressed in the paper. No, I think one of the points that comes out in the literature, is it on?
Is he on?
Is that on?
No.
How about that? Yeah. Okay. All right. Has to be a red light. You would think it was a green light. Yes, to answer your question, that point is addressed in the paper. I think what you commonly hear is that in Japan, perhaps usage of credit is low because of cultural factors, whereas I think usage of credit has been historically low in that country because of the regulations that I described earlier, that they didn't make it possible for banks to extend revolving credit. I think what has been seen in, especially in Japan, the EDI card was an electronic money system that could be used on the smart card in Japan. But in 2006, when they made it possible for the EDI card to be moved from the smart card to the mobile phone, they actually found that usage of the EDI card increased by about 40% when it was on the mobile phone platform. So I think that makes the point that people want to be able to use their mobile phone to make these types of payments, whether or not they're making it through a credit basis or prepaid store value basis. It's to some degree incidental. But the key point is that they want to be able to use the mobile phones for this, and when it's on the mobile phone, they use it much more.
It's just one other key point, which I think is really important, because I think it's common, it's correct, but not fully taking it all. I mean, if all this was just about contactless payments, we probably will get to a contactless payment infrastructure in the U.S. eventually. But I think what this is much more about is the ability to do the information portion of it and the authentication portion of it, which really is a more complex thing, and you need a smart card or a cell phone, ideally a cell phone. And that just opens up a whole new set of applications. So I'm going to try to do an order. I think, Clyde, I saw you next, and then lots of questions. So.
Hi, I'm Clyde Prestowitz from... Jeez. So am I?
We're working at the kinks in the...
Rob, I just want to say how shocked I am that you seem to be proposing an industrial policy. Don't you?
That's what we think about.
Sorry, your time is up.
There's gambling here.
You understand the market will solve all this?
We're proposing technology policy. How's that, Clyde?
Okay, that's better. Much better. Much better.
Much better.
Listen, I did have a serious question.
You're not on the mic, so maybe you can talk a little louder. I don't know why. Sorry.
Is that better?
Yeah, there we go.
I do have a serious question. The points you made, I thought were, and Steve made, very important points. I'm a little confused by Mark. Mark actually says that the market will sort this all out. I don't know if I've understood him correctly or whether he's at odds with you on how the market's going to function. So I'd like to ask that. And then my second question is for you, Rob. Given the points you've outlined here and the recommendations, do you have any hope, any serious hope, that any of this will be taken seriously by the powers that be?
Mark, why don't you go first, and then I'll...
Is this audible?
There, that's better. Yeah, but it says red, that's on. Interesting. So will the market sort this out? Well, it might. Let me give you an example of the progress so far. One of the key questions has been interoperability. And when the three competing payment card brands, American Express, MasterCard, and Visa, went into the business of doing contactless in the United States, they could have done it in a fashion that required the introduction of incompatible terminals. But they've had a history of this thing. When they moved to the electronic world initially, they worked with ISO. The American Bankers Association set up standards, so you knew exactly where on the magnetic stripe the information would be coded, and it was universally adopted and internationally available. No particular government coercion. It was just clear self-interest on the part of the people involved that you didn't want to have merchants installing 3 or 4 different terminals in order to accept all different credit cards. In the contactless world, all of the payment brands accepted the ISO 14443 as the communication standard to get the information from the card to the reader. Now, the application on the reader itself is different. So what American Express does is different from what Visa does and what MasterCard does. They all have different payment applications on the reader itself, but to get the information from the card to the reader, they were able to adopt a standard that was already there and thereby cut the cost of manufacturing the terminals. Can that kind of stuff be done in general? I'm not sure, and my suggestion would be less of a government priority in this area and more of a role for government to convene the stakeholders. There's billions of dollars at stake here that needs to be expended if you're going to move to this higher level of technology. Merchants and the payment card world are at odds, to say the least, these days because of the expense of using payment cards. There's legislation in which they're on opposite sides of the fence. It's not clear who would pay for the upgrades involved in this kind of stuff. So it may be useful to have a government supervise a discussion among the interested parties. Government, could be represented by the people that Steve had mentioned, but you'd have to have some of the merchant groups. You'd have to have the financial interest, the financial service groups. You'd have to have people representing public interest to make sure that privacy and other issues are properly addressed. So I think some mechanism like that might get everybody in the room, and then we could decide whether we really wanted to move forward with this new technology and how it might best be done. But I think right now it's a little premature to say we want to go there, and so we're going to push, by having government adopt the technology. That seems to me to be a little bit premature, and I'd take the first step of calling a commission together to sort of think about it first.
Go ahead, Dave.
Yeah, let me just make a little different observation. I have to respond to the industrial policy comment. And it's a little different than I think how you put it forward on what the government's role was in Japan, Stephen. Yes, the ministry did produce strategy papers and vision papers. They've been doing that for many years, talking about the ubiquitous society. They worked closely with the Docomo folks and the others in the industry on understanding what's going on with the technology and putting forward a vision. So yes, they did kind of give some vision direction. But I think it's more important, the more important thing to focus on is what they did not do. For the most part, the Japanese regulators followed the US model for wireless regulation, the so-called light touch model. They allowed the carriers to experiment with new services. They didn't interfere. They knew that there was great hope with this technology, and so they didn't seek to jump in and try to micromanage it. They didn't, as this service started rolling out, they didn't seek to preemptively jump in and set a set of regulations, much like, as you mentioned in your paper, Stephen, the Europeans did, which was not a good approach. They did not seek to apply a lot of the banking regulations. In fact, as Stephen noted, they've changed those, allowing money transfers by non-bank institutions, etc. And they also did not mandate a standard. Now, that could be good or bad, but the market has been dealing with that out in the marketplace. So, my sense of it was the primary motivating factor for why Docomo aggressively jumped into this was truly a risk, a fear that if they sat back and did nothing, then they risked becoming nothing more than a dumb pipe. And for the bank's position, I think they saw that it was a real opportunity to tap an untapped market in Japan with micropayments, and maybe with the Japanese culture, business culture, there was more dynamics for collaboration and for the ecosystem to come together. But I would argue that there was not a heavy role of the government behind the scenes, all of the Johnson vision of the old media and the Japanese miracle. I would counter that that's what happened in this case.
Let me just, I guess, respond to a couple of things. One is, The problem with this debate, Clyde, as you know, is we tend to vacillate between these polls in the U.S. of abdicate versus regulate. And David's right. They didn't regulate, which was the right decision. But neither did they abdicate, I would argue, and neither should we abdicate. I would think the goal here of the government is to facilitate, not to abdicate and not to regulate. And I guess I would differ a little bit with Mark in the sense that I certainly could see a scenario where within the next 5 years we evolve into essentially a payments cul-de-sac where we can do things on a credit card, but that's about all we can do. I don't want to be in a payments cul-de-sac. I want to have this device be authentication, information, and payments. The faster and farther we go down the payments cul-de-sac, the harder it is to step back and do this other thing. I think we know now, we absolutely know now what the right technology is. It's not a complicated thing. And part of what I guess I find a little bit interesting about this debate is the FCC right now has a national broadband strategy. Why are we doing that? Who are we to say that broadband is important? Who are we to say that faster is better? You know, and it's because we sort of have a consensus. We look at this, we evaluate it, we look around the world, we see this as a critical technology to success, and we decide there's a role for government to play, a key helping role. I don't see why this is any different than that. To go to your point about am I hopeful, I am hopeful actually, because the FCC Broadband Task Force is looking at this. I'm not saying they're taking a direction from us or anything, but before this one of the issues that they're looking at on the task force is mobile payments. So I'm hopeful that they will have some important and insightful recommendations to be made about that. I'm also hopeful that you all can now go forward and proselytize the religion of mobile payments, and we can take 1% of the effort and energy in Washington devoted to broadband and allocate it over to mobile payments, and we'll have this in a year. So there was a question right here.
James Miller from the FCC. Good to see you, Mark. And
you want to have a question? Can you go to the mic?
Oh, sorry. Just an observation from non-mobile e-commerce applications. I think you could observe that there's been a transformation in terms of how people do an online transaction and then translate that into a real-world experience. You've seen people, they'll print out specialized barcodes. Those can be read by, typical terminal readers. In effect, you could see that there'd be a way of either embedding the technology in the handset or at the user experience somehow, or you could have it networked somehow. And I'm wondering, has there been, in effect, essentially using mobile broadband or something else, web-based transactions that then are displayed and then reading? Is there any synergies between that and essentially a hardware-based approach that would be essentially, kind of teeing up the two-sided market problems that Mark was mentioning earlier? Or, yeah, there's standardization if you could talk about synergy.
This, by the way, is the first time we've used these microphones. No. And you can tell. Sorry about that. We're still working out the bugs.
It's green. I think the battery is going out.
Green means it's working now. So on the mobile broadband, as I think most of the panelists have noted, the way this technology works is not on the carrier communications channel. It doesn't get broadcast in that fashion. So it doesn't involve sort of spectrum issues in mobile broadcast. It really is, the near field communication where it's very, very shortwave. But I think you're right that there's some experiences in which you can move from electronic commerce in the fixed world to the mobile world. But I think a key thing that's going to have to get done in order to get this done right is to make sure that the privacy, security, and consumer protection rules are properly in place. And if that gets done, I think that will be an affirmative role for government to be playing in this area.
This is a question, I guess, from
identify yourself.
Oh, Morgan Reed with ACT. That one dead. Don't worry about it. I'll talk loud. One of the things that one of the points that hasn't gotten made is phones offer two-factor authentication, which is a huge benefit for security. How much does the card industry currently spend on reissuance of cards, either from theft or from loss? And if we move to mobile phones, I know it's a bit of a cost shifting, but your amount of cards you have to reissue goes way down, and there's probably, hopefully, a loss of the $50 payment, how much you have to pay for for people stealing the card and using the card before it gets reported, that gap between the time that we turn it off and it gets abused. How much do you guys currently spend right now on the reissuance of stolen and lost cards? And is that some money that might be incentivized, might be used to incentivize the industry to move, to say this is some money we can recapture?
Let's make a brief comment on that and then pass it on to Mark. In speaking with representatives of NTT Docomo for the study, they actually did mention to me that, their experience in Japan was that the cost of issuing credit cards, was actually quite expensive, and the credit card companies have found, especially through their relationship with Mitsui Sumitomo, that they saved quite a bit of money by moving it into the mobile form factor, and that was actually a significant set of cost savings and financial value.
That's one of the issues that would make it attractive and desirable for the payment card world to move towards this higher level of security. But right now, the level of fraud loss and card reissuance and that is tolerable to the payment card industry. In old numbers from the Visa system, it's 5 cents worth of losses for every $100 of transactions, which is bearable from the point of view of the financial institutions. So if you just look at this from the point of view of preventing fraud, it doesn't look as though it's got a cost-benefit ratio that would enable people to do it. It's enormously expensive to make these upgrades. I mean, there are 1 to 1.5 billion cards in the United States. There may be 20 million merchant locations. You do the numbers on upgrades, and you really have to have a substantial increase in security in order to justify that. It's going to have to get done in conjunction with a lot of other benefits, the kind of things that Rob was talking about, where you can do merchandising and ticketing and a large number of other benefits that will convince people that it's worthwhile to get done. Just on the security stuff, it may not be worth it at this point.
I'll make a comment on that. In the security, the other thing that Stephen's paper points out is that it's actually, from an end user standpoint, a much more secure system. Most of the phones now in Japan that have this have biometric security in addition to a PIN code. And if you do happen to lose your phone or leave it somewhere, you can immediately shut it down remotely, including wiping off all of the sensitive data. So compared to that, to losing your wallet, which I'm sure all of us have done at some point over our ways, it's a big savings over that.
You know, you ought to do it like they do it in Mission Impossible, where the phone burns. Right. Much more effective.
Oh, yeah, I think that's pretty hot already.
Go right ahead.
Kate Kingberger with CPIA, and just a counterpoint for that question on fraud with the credit card. The average time to report a lost credit card is 1 to 2 days, and the average time to report a lost phone is under half an hour. So the amount of transactions that anyone can physically do in that amount of time is a benefit. So.
Good. Michael, and then here.
Okay.
You can just talk loud, Michael.
Michael Calabrese with the New America Foundation. I was just wondering if maybe there were some scattered thoughts on this, but maybe to go back through about what you would see in the U.S. as the industries or the transactions most likely to drive a critical mass of adoption, because in the countries I think that Stephen spotlighted, it really, and it was suggested that transit really drove a critical mass, but those are mass transit societies. The equivalent for us probably is the self-serve gas pump, where we already have it. It's automated and fairly easy, and government obviously can play a direct role in forcing this in transit in those countries, whereas here it's not as evident. And maybe it's the aggregation of all government transactions, as Rob seemed to suggest. But I'm just wondering what you see as most likely to drive adoption here.
Well, I think going back to Clyde's question and going off Mark's point about, well, won't the market get us there? Well, sure, the market may get us there at some point. in broadband, the market may get us the ubiquitous coverage in the United States of broadband at some point, but there are things the government can do to accelerate, speed up, and facilitate the arrival of that process. And I think it's very important that government play a similar role here. You know, I think what you see between merchant and transit operators is that they tend to make the deployment questions on the same basis, which is that they assess their own ROI and they make the calculation about whether or not investing in readers are worthwhile. So I think certainly when transit agencies on a one-off basis make that analysis, they find good things. So in Washington, D.C., WMATA found that they were able to decrease staff by 50% after they went contactless. The transaction processing speed goes from 700 milliseconds to 200 milliseconds. So one-off transit agencies make these decisions on their own, but I think if the government got involved in looking at it like the UK is doing on a national level and moving to get all transit agencies to deploy it, I think that would be a huge driver of consumer demand. But then going beyond that, I mean, consumers, for them to want to buy a mobile phone with this capability, are going to want to know that they will be able to use it on a ubiquitous basis. And that means they'll want to use it at the street meters, and they're going to want to use it in parking garages. They're going to want to use it anywhere they engage with the government, the POS terminals, right? So bring the government use case online. In the commercial sector, you know, I think convenience stores, restaurants, quick service restaurant environments will be huge drivers. I think also merchants. I mean, you've seen Best Buy, you've seen Home Depot deploy this. They're finding cost savings, so I think we'll get the big box retailers to see that this speeds up their environment as well.
Another way to look at this, I think, as well, in terms of this chicken and egg scenario, it's really not about us now, right? If you look at it that way, it's about my 12-year-old, right? I mean, anyone who has a child that age, is there any doubt in your mind that if the infrastructure was out there, that they would, when they get into college, go back to the old way of doing things, or they would become your mass users? But the infrastructure, to Stephen's point, has to be out there before it can all take place. And I think a lot of this, to get to the point of why it happened in Japan and it's been slower to happen here, does go back to a different cultural aspect in long-range planning versus a more wait-and-see, cautious approach that we sometimes take here, wanting to see demand first before making a big investment. And I think there is a big cultural difference in the businesses on how they approach issues like that.
We have time for one more question, but I just want to add a point to what both what David and Stephen made, and that's this key point of what economists would call network externalities. Why intervene if there's no market fit? I would argue the market failure is that for the transit agency or the 7-Eleven or whoever else is going to invest in a NFC reader, they are not the only ones that benefit. The benefits are probably double to society as a whole by building a network, getting the network bigger, sort of like the original fax machine. More frankly, it's really what broadband is about. More people with high-speed broadband enables more apps, so there's a market failure. And Michael, to your point, I think one of the key interesting things on this is you can think about sort of adding readers at a national level on all transit, or you can think about something more focused. What if New York City, there was a partnership between the federal government and New York City to do parking meters, transit, and some other things, and then you start getting people in New York to adopt this. To me, that would have a stimulative effect on the nation as a whole, because people would be comfortable with this, they'd see it, there'd be articles about it, people would hear about it, and people would then start to deploy in other places. You don't need, I would argue, deployment everywhere to get this national marketplace off the ground. I'm sorry we don't have time for one last question, I promise 11:30, so yes, sir.
My name is Jerry Pelliquin. I'm managing editor for Microfinance Focus magazine. I'm here with my technology editor today. You can imagine I came for what I thought was a different meeting. We serve 60,000 microfinance professionals worldwide, and the cell phone is an intrinsic instrument for dealing with the bottom of the pyramid. I've also spent a good deal of time working with Japanese companies on it. I wanted to ask Mr. Jepson if he knew how to spell Keiretsu. I feel the not so subtle hand of pity over all of this, and I'm wondering exactly if Mr. Jepson protested too much, if there is not really an industrial policy at work, not just in Japan, but in most nations other than the United States, there are industrial policies. And it's one of the reasons why we lag behind not in the creation of the technology, but in its implementation. I heard someone say that he was appalled over the thought of industrial policy doesn't apply.
I was being facetious. I was being facetious.
You know Clyde's work. He's
Well, I don't know. I still think that guy who went to
He didn't see
a
your
cocktail
face.
at the end of work and found himself in a speed dating. So, and that's his way behind. So, but that was just, I just wanted to comment.
Look, the cultures are very different. There's no doubt. I've spent 5 years of my life in Japan. Most of my professional career, I've worked with Japan and Japanese. You're not going to get any argument from me about our cultures being very different. In fact, I think our companies that try to do business over there are very short-sighted in trying to understand that. But I think it's somewhat of quite frankly, a stereotype to go back to this notion that Japan is operating under the Keidatsu model. Okay, you know, look, whatever was going on in the 60s and their approach to come out of the post-war industrial revolution is very different than I think things are operating like right now. I think there is a very big cultural difference, as I mentioned earlier, in terms of business culture's attitude on long-range planning. They're very well known for, on these chicken and egg scenarios, taking a flyer and building it and hoping the market will come. And our guys just don't do that. I mean, we take a much more cautious approach to making these huge investments. And I think that's the biggest cultural difference. But the idea of this back room, everyone sitting on tatami mats, smoking, making a big industrial policy and pulling everyone in the room is quite frankly a myth.
If you say so, sir.
Let me just close by saying I think clearly the notion of public-private partnerships is more accepted in Japan. Certainly it's more accepted in Korea and Singapore and even the UK. So at least we would argue there is some role for government to facilitate here at minimum, certainly to be an early adopter where it makes sense for the government to do that. Let me just close by two things. One is this is a series, this is number 2 of a series of 5 reports we're doing looking at IT application leadership. The first report was issued in September where we looked at health IT, and there, surprise, surprise, we were way behind. We're behind the Scandinavian countries that are probably 4 to 5 times ahead of us in terms of health IT usage. And we'll be releasing a third report in this series in January on intelligent transportation systems. Looking at what countries are leaders there, why this is important technology, what government can do it, and then a report after that on authentication and ID, interesting developments there, and then finally e-government. So with that, thank you for attending, and please join me in welcoming and thanking Mark, our guests.